Good afternoon, everybody. I want to thank you to this month's webinar. We are very excited to have a fireside chat between Melanie Lubin, who is the Maryland Securities Commissioner, and she's the immediate past president of the North American Securities Administrators Association, or the NASAA. And we are also joined by Margie Weber, who is the Director of Regulatory Compliance at Reg Ed. I want to remind everybody that this webinar is being recorded. Please make sure that your microphones are muted, and there will be you'll be able to put your questions through the chat. So please be sure to do that. And any unanswered questions will be addressed after the webinar. And I believe that is really all I have. We are very excited today. This is going to be a very knowledgeable and important fireside chat. So we're so grateful that you're joining us. At this time, I'm going to turn it over to Margie. If you need anything else, Margie, let me know.
All right. Thank you so much. Thank you, everyone, for joining us today. And I want to especially thank Commissioner Lubin for her appearance here today. She's been very busy this past year as serving as NASAA's president, and also has many decades of serving in various roles with NASA. So thank you, Melanie, for your service, and welcome to the webinar.
Thanks, Margie.
I think there are some people, we have a mix of industry and general investors present on our webinar today. And I think some of our attendees may not be aware of NASAA. So could you give us a kickoff about what is NASAA? Give us an overview of NASAA and what they do to protect investors, if you would.
So first, we're not the space people, much to my 20-year-old chagrin, who's an aerospace major in college, but he's been hearing NASA his whole life. But we're NASAA, so we've got an extra A. It stands for the North American Securities Administrators Association, and we are the association of the state, provincial, and Mexican securities regulators. So each of our members represents their jurisdictions, whether it's the state, the Canadian provinces, or the Mexican securities regulator. And what we do is try and develop model regulations, uniform securities, uniform approaches to deal with state securities regulation. We do joint training programs. We have legislative initiatives that we go through on the federal level, mostly in the United States. We have our annual legislative agenda that we deal with, really, biannual, because Congress runs for 2 years. We have model legislation that we create that we bring up in each of our jurisdictions, model regulations that go along with the Uniform Securities Act. We have different programs to promote responsible capital formation. We have different investor education programs that work on investor advisories, investor protection issues, and different kinds of things like that. So we try and keep things coordinated state by state, run different licensing systems like CRD and IARD that some of the people on the call might be familiar with, run the public disclosure parts of those systems, broker check and IAPD-I, which is the investment advisor public disclosure system, and things like that. So we coordinate things amongst the states. So it's relatively seamless to go state by state for all the things that go on in the securities regulatory space.
So NASA doesn't itself have jurisdictional authority. It's their members, the state securities regulators, that have the jurisdictional authority, correct?
Right, that's correct. So we could pass, so we had our annual conference last week. We passed some model regulations, and what happens is we come up with a model, it's put out for public comment. We do an internal comment with our members. It goes out for public comment for interested people in the industry or consumers to comment, come back, vote on a model provision, take the model provision. Once it's adopted, bring it back to our own jurisdictions, and then work on adopting it at home. But then it goes through the normal process where it then again goes out for public comment. It gets adopted during, in the normal process under the Administrative Proceedings Act in each jurisdiction. So it'll go out for public comment, depending on how your state works. So some states it has to go through the legislative process. Some states it can go through just the regulatory adoption process, but then it has to be adopted again within each jurisdiction.
Great. Obviously, one of the missions of NASAA and the state securities regulators, who are the members of NASAA, is to protect Main Street investors. And I know that the NASAA website has numerous resources that are available to the general public as well as to the industry. Do you want to share anything about the NASAA website and the resources that are available there?
There's lots and lots of information on the NASA website. Sometimes we think too much information, but it's www.nasaa.org. And there's all kinds of information, both for consumers/investors, as well as for industry folks, as well as for state legislators who might be interested in finding out what's going on, and anybody else who has an interest in the securities area. So there's information in the broker-dealer space, investment advisor space, corporate finance space, also franchise space, because about a third of our members regulate in the franchise space. There's also information for a very fulsome section of our website is devoted to investor education, and for investors figuring out how to avoid scams, how to avoid frauds, how to make sure, how to select their investment advisor, how to select a broker-dealer agent, and all kinds of information like that. So, there are sections like that. There are all of our comment letters that are made on federal legislation, made on federal rule proposals, made on FINRA's rule proposals or anybody else's rule proposals. All those things are posted on the NASA website. All of the things that are out that NASA's putting out for public comment are also posted. Anything that's been adopted, any of the model rules, any of the amendments to the Uniform Securities Act, all of those things are posted on the website, as well as press releases related to multi-state enforcement actions. And there are also sections where we try and keep up with what's gone on with state proposals. So people can take a look at that and see what's going on with their own jurisdiction. And there's a section we'll cite to as we go through these questions about how to contact your regulator. So when we say contact your regulator and you want to know where to go to find, find me in Maryland, find, your regulator in East Dakota. It's not really a state. We always just call it, we always use that as the example, but find your regulator in whatever jurisdiction you might be in. There's a big map. You click on your state, you'll come up with the person's name, maybe a picture of that person, and find out exactly how to get in touch with their office.
Perfect. Thank you for that. Now, NASA members participate in various NASA committees. And one of the committees is planning a webinar for November 3rd. It's the Senior Issues and Diminished Capacity Committee.
Right.
So that is available on the NASA webpage for you to register. And
sorry.
No, go right ahead.
Right.
Committee.
So that committee has had a series of webinars, and actually their prior webinars, as well as other things that we've done that have been open to the public, are available on our website to take a look at. There's other investor education material, but that particular webinar is about is going to have securities regulators and adult protective services agents speaking about what their experience is dealing with complaints filed by seniors in the security space and in the investor protection space. So that is on November 3rd at 2:30 in the afternoon Eastern time. And people who are interested in it can go onto the website and just sign up and register. And it'll be something similar to this. I don't know that it's Zoom, but it's a similar platform. You register, you'll get a link, and you'll be able to log in that afternoon and watch the webinar. And as well, there are other webinars that project group has put on, again, in the senior space, and issues that are coming up of concern in that area, that people could go back and take a look at earlier webinars that went on.
Okay, thank you for that. And for the attendees, we aren't using a deck here, but we do have a deck available with several pages worth of resources that would be beneficial to investors or to people that are in the industry who, if you're not already monitoring what regulators are communicating to their investing public, you probably should. But this slide deck will be made available with the recording of this on the SILA Foundation website. So look at that when you have a moment, and some of the things we've already talked about, such as the link to this to register for this November 3rd webinar, is available there. Obviously, the topic of conversation for this webinar is the rise in financial crime. It's been, I mean, the past, I don't know, 5 years especially, it just seems like it's just exploded. And it almost feels like the fraudsters are getting a little bit smarter. It's almost becoming more difficult to detect fraud attempts. Would you agree with that? Or
I absolutely agree with that. The investors are getting smart. The investors are smarter, but the fraud artists, the con artists are always steps ahead of the investors. And, I, like you alluded to, I've been at this for several decades. I guess I'm in my 4th decade of doing this. I've been with the securities division. It's actually going to be 36 years in the middle of October. So there, unfortunately, is always plenty of fraud to go around. And in the early days of being online, what we saw were kind of the same scams that morphed from being something that was on the telephone or actually came in the mail in letters that people said, wow, what a great investment opportunity. And it was a scam, and they would like write a check and put it in the mail and somebody would get it in the mail. So then those things morphed to being email, and people would get it and they would like still put a check in the mail. And then when there was electronic payment mechanisms, they would send an electronic payment to take care of it. But they were still kind of the same old scams now. And those things have evolved very much so, where it's become more and more difficult for investors who are getting emails, clicking on ads, things like that, to really be able to discern between what's legitimate and what's not legitimate. So I've never really liked, caveat emptor, because, there are lots of us whose jobs are out there to protect investors, but regulators can't be every place.
right.
So it's just so important for investors to really watch out for themselves, and for, legitimate industry people to really preach to their clientele and to, potential clients, how careful they have to be to make sure the people they're doing business with are in fact legitimate industry people.
Right.
Because things look so real that, look so legit that really just are not legit.
Right.
So forget about like within the legit industry, figuring out, is this a better product? Is this something in somebody's best interest? All that other stuff that we worry about with legit industry, within the legit industry, figuring out these days whether something's legit or not is the first threshold issue. And trying to come up with that answer is a very big lift. So, all the stuff we've been saying for years about, checking out, the person you're doing business with and all those kinds of things is just so much more important now. And
Right.
not necessarily, I advise against just clicking on anything that somebody sees. Even an ad for a website where somebody thinks they're doing business with a legitimate firm whose names they hear all the time. There's been a lot of cloning of websites now.
Right. Even regulated websites.
Regulated websites are, legitimate firms that names we all know and see ads for all the time, and all recognize, that look like they're the legitimate websites, but the websites have been cloned and they're not legitimate websites. So people need to be very, very careful to know, whose site they're clicking on, and are they
Right.
actually clicking on the site they think they're clicking on.
Right. And it's so sad that the most vulnerable are the ones that are primary targets for financial exploitation. Our elderly, our vulnerable adults, and a lot of times the perpetrators are their family, they're people that they love. And I'm sure that some of those victims of fraud hesitate to report for a number of reasons, maybe embarrassment, or it's my family, I don't want to get them in trouble. But you and I were talking yesterday about the need to report quickly. So can you share some?
So we've got we have like some scaffolding in place. So there's a lot of different things. So first, before somebody clicks on a website and decides that this is, where they want to do business or how they want to do business, I still recommend that you pick up the phone, you check that thing out with the regulators. You got to be very discerning when you look at a website. Legitimate company websites don't have issues with their grammar. They don't have typos. They don't look like someone who hasn't mastered the English language wrote the website.
Right.
So people need to be very sensitive to those kinds of things. And like my husband, I happen to be a very sensitive reader of the English language. And my husband, I make him crazy when I read his emails when he has to send them to somebody, or I make my staff crazy when I, proofread their stuff. But when you're clicking on something, when investors clicking on something, they need to read it like they're proofreading it.
Right.
Because that's a clue, that's a hint that it might not be real, because companies spend a lot of money making sure their websites are perfect.
Right.
And if you look at a website and it doesn't look perfect, that's a clue that it might not be a legitimate website.
Right.
You look at the string of the name, in the URL, and that might be something a little bit beyond some investors, but that you don't see like the name of the company up in there, that's another clue.
Right.
So there are things like that. You get a hold of somebody's name, take that name, call your state securities regulator, and let us run the name for you and find out if that person is actually registered.
Right.
Those kinds of things are really important, because you don't really want to do business and, set up an electronic transfer of your money to somebody that you don't know. Now, maybe you do that, you transfer money, and all of a sudden you realize I shouldn't have done that. The sooner you report that, there are ways for us to get involved when you report it really quickly. Like it happened 5 minutes ago, and you pick up the phone and report it, where we might be able to intervene, get the FBI involved, and stop the transfer of the money, because usually that money goes offshore someplace, and it's really difficult to get back.
Right.
If not impossible. So reporting quickly, no matter what the situation is important.
And reporting to whom?
I would report to the State Securities Division, because, I like to say you don't report to the FBI if you've been mugged. You go to the local cops. You go to the local police department. State Securities Divisions are the local cops on the beat. We are the boots on the ground. The Securities and Exchange Commission does a wonderful job with what they do, but we really are the local resources for these kinds of issues. So if you think you've been a victim of an investment fraud, come to us first. If we're not the right ones, we'll help you get to the right place to go. But we're really the ones who can get involved. And then, we've got other rules. We've got like report and hold. We've got laws in place. One is like a report and hold law. So if a financial professional thinks that, and this law has been passed in about 35 states, if a financial professional thinks that senior or vulnerable adult is being financially exploited, they can execute it on transaction, but hold the disbursement of the transaction while they report to a regulator and adult protective services that they think that a senior or vulnerable adult is being exploited. And then we can get involved before the money is transferred out to try and protect that senior or vulnerable adult from, that money disappearing and that person being, further victimized from what's going on. So we've got so there are laws in place to try and do things like that. There's another initiative we have called the Trusted Contact Form, where if the financial professional tries to get, when somebody opens an account, or even once the account is open, asks the account holder to say, okay, if we notice something strange is going on with your account, or we have an ongoing relationship, and all of a sudden you come in and you ask us to do something you wouldn't normally ask us to do with your account, or we've been talking to you for years and your math is always spot on and you're sharp as a tack, and all of a sudden we start to notice that you're not so sharp, or your math isn't spot on, or you're asking us to do something with your accounts that you would never ask us to do in the past. You're giving us your permission in advance for us to pick up the phone and call this person and say, look, mom or dad came in, or maybe it's going to be your lawyer and not one of your kids who's your trusted contact, and say, your client came in, they gave us permission to call you if something looks, if we're concerned about something they told us to do, and you're their trusted contact, I'm calling you because they gave us permission in advance to call you if we see something that doesn't look right. So we're calling you. Doesn't give that person power of attorney, doesn't do anything like that. It just allows the firm to contact someone when they see something going on that's concerning.
Okay.
So that's something that the firms have become more involved with, financial planners, investment advisor, broker dealers, stockbrokers, to try and get a trusted contact filled out, because we're all aging,
Mhm.
unfortunately, and one of the first things to go is financial acumen as people age.
Right.
So you want to kind of have some seatbelts and scaffolding in place to help people as that happens. So like the trusted contact form is something that's there.
It's
But,
very important.
the holds, the report and hold laws are things that are in place to really try and be proactive to prevent some financial exploitation and other really bad, financial outcomes from happening. So we've got a lot of stuff like that there to, try and protect all of us. Before you reach that status, a lot of it really is, caveat emptor, watch out for yourselves. There's all kinds of information on the NASA website and on most of, each state's own websites.
Right.
That give information about what investors can take a look at to try and protect themselves from, being defrauded.
Right. One of under your watch as the NASA president, NASA released a number of informed investment or investor advisories, and we've seen some new terms coming up. Metaverse is one. Can you give us an overview of that? There is an informed investor advisory out there on the NASA website. The link to it is available in the deck that you will have access to as well. But let's talk about Metaverse. What the heck?
So yeah, so you may want to be asking like a 20-something about this more than asking me, but
They already know it all, don't
right?
they?
They already know it. So the metaverse is, kind of an existence online. It's like just, you kind of take your life or take a life and you get online and you function online. You can buy things, you can sell things, you can have this existence in a virtual universe. So you can have financial relationships, you can have all kinds of other relationships. I'm not going there. But what we're concerned about are really the financial relationships. And the securities administrators have taken actions because there have been securities offerings online where people can invest. And there have been 2 actions relatively recently against online casinos. That one was against Sands. It was called Sands Vegas Casino, and there was another one called like Flamingo Vegas Casino. Have nothing to do with the this real Sands Casino in Vegas or the Flamingo Casino in Vegas. People saw the names though, and naturally thought that they had something to do with it. And both of those investment schemes were traced to Russia. And people were investing. There was a gambling aspect, but there was also an aspect of investing in the casino. So they were collecting money from investors to invest in this online casino. And we issued stop orders and cease and desist orders and things like that to try and stop the deals from happening, because they didn't worry about any of the compliance that they're supposed to worry about when they're selling offerings. So, as a regulator, I don't care if somebody's selling it online, they're selling it across your kitchen table, they're selling it, however they're selling it to you over the phone or whatever else, it's still a securities offering, and they need to comply with, with securities requirements, because those requirements are out there to protect the investors. Did a regulator look at it? Did the promoter even, worry about coming into compliance, which is, at least some small indication that they care about complying with the law and doing what they're supposed to do for investors? Are the investors getting the disclosure they're supposed to get, which means that somebody bothered, to have an audit done by certified public accountants that are going to tell you what's going on with the finances of this particular company, so then they can develop the disclosure information that an investor needs to make an informed investment decision. And all of that is either reviewed or it's subject at a minimum to the anti-fraud disclosure requirements, or more likely subject to very specific disclosure requirements under the regulations for a securities offering. Right. Did they do those things? So in any universe, like the real universe or the virtual universe, So those things apply to the virtual universe. And, that's kind of what's going on in the metaverse. You can do everything you can do, in the real world, I guess IRL, in real life, in a virtual life, up in the metaverse.
I wrote a quote down, Amanda Sin with the Alabama Securities Commissioner. She's, I think, the chief deputy director there. I quote her, virtual reality can leave you virtually broke. So,
yes. But I think it can leave you really broke.
Yeah.
Yeah, it leaves you
really
broke. It leaves you really broke. Yes.
Right. So another term that we're seeing now, in addition to metaverse, finfluencers. There's also an informed investor advisory on that. So can you give us a little bit of overview of the finfluencer?
Yeah. So this is, there's been an expression. I probably didn't know this expression when I was really young, but the expression "consider the source."
Yeah.
So finfluencers, I mean, we probably have heard of influencers. So influencers are, all the people who got paid all kinds of money where we all said, wow, I should have thought of that. To get online, you all get free kinds of, you get free stuff because you got lots of followers and everybody's selling you clothes. So you do your selfies and you're showing their clothes and you get all kinds of free stuff because you've got all these followers and, whatever clothes brand you're going to show up in their outfit, wants the free publicity. So influencer in the financial universe is now called a finfluencer, cute word, put financial and influencer together. Again, you got to consider the source. Just because somebody's got a whole bunch of followers does not mean they know anything about financial anything.
Right.
But got lots of followers. They're out there touting stuff they may or may not know about. So now they're called influencers. And, they were popular and we've got an investor advisory out about it. But again, consider the source. What's the person's background? What do they know? They're probably getting money from, they're getting money from whatever they're touting.
Right.
Not unlike the concerns people had about people who are on all the financial shows where you might have some disclaimer at the end that says, we're getting some money for touting these products.
Right.
Which you don't know because while you're watching, you think it's unbiased advice until you see the fine print at the end of the show that says we're getting a kickback for whatever sold, or we might get compensated for whatever. They don't say, I'm a regulator, I'll call it a kickback, but at the end of the show, they say we might be compensated if, for what's sold based on what we discussed today. So finfluencers are no different, but you gotta consider the source. They're probably not technically investment advisors because they're not giving specific advice they're giving specific advice, but they're not giving specific advice based on that person's specific situation.
Right.
So they're not necessarily regulated, but again, they've got a lot of people who pay attention to them. Again, consider the source. I'm not quite sure for what reason. Somebody might be great at, for pop music or for whatever else they do, or they take great selfies, or they, look great in clothes, but it doesn't mean they know anything about finance, and they're out there touting products. They don't really know about anything. And there's been people who were big shot influencers for a little while, and then they started unwinding things that they've said.
Right.
So when they realized it wasn't good advice and maybe they weren't qualified to say it. So I heard a lot more about influencers probably about 6 months ago. It seems to have died down a little bit, but that doesn't mean I'm sure it's still out there.
Right. Now NASA just and forgive me, I'm going to look at my notes here, but NASA just released their 2022 enforcement report, and a link to that report is provided in the deck. According to this report, in 2021, state securities regulators were able to obtain more than $145 million in fines, over $312 million in restitution, and approximately $4 million to support investor education. So those stats certainly evidence, the state securities regulators' commitment to investor protection. And one of the report, I'm sorry, what am I trying to say? Okay, so according to the report, NASA members reported more enforcement cases involving promissory notes than any other instrument. So can you share us a little bit about the concerns around promissory notes and why they're used so frequently to defraud investors?
Yeah, so promissory notes are on the list every year.
Yeah.
I mean, I could speak for my office, and I could speak for just what goes on every place else. So if you've got someone, and this tends to be, but isn't always, outside of like the legit industry investments. Somebody wants to do a deal, wants to get people to invest. They're not necessarily going to walk up to kind of, your average investor or their neighbor or somebody else or some group of people that they know, and they're going to solicit some way and say, buy stock in my company. Because people understand by and large that owning stock doesn't necessarily mean that you're going to get cash back, that there's a way to, there's some liquidity event where you're going to get your money back. But when you offer somebody a promissory note, there's the principal and there's the interest. And there's usually a date certain where somebody's going to be paid. So investors don't perceive those as being risky the way you might perceive a stock purchase. Because, there's your principal, there's your interest, there's a payment schedule, and there's some date certain where you're going to get your money back.
Right.
It's a security because people don't get their money back. I mean, there's all kinds of law out there, and I'm not going to, do a securities 101
right.
Explanation about when a note's a security. But there's a lot out there about when is a promissory note a security, and there's securities when there's risk involved. And these notes are not like commercial paper notes where they get paid off on a regular basis. These are risky things that make them into securities. But for somebody who's trying to sell something like that, it's a much easier sale to an investor because they know when they probably, in their mind, they're going to get their money back. So no matter what kind of deal somebody wants to sell, it's a lot easier sell to sell a promissory note. So we see promissory notes on these lists all the time. We've got lots of flipping deals, all kinds of things like that. They're not always scams, but there are a lot of times deals that go south. When flipping properties was a big deal, when it was the really hot thing on HGTV or Discovery or whatever channel has all those TV shows, everybody thought, oh, I can do that. And I've always had this rule that kind of once it hits People magazine, it's not a good investment anymore. It's like, it's way too late. It's in People magazine. Everybody who really could make money on it has already made the money on it. And when it's out there to the masses, no offense, I'm part of the masses too. When it's out there available to the masses, it's way too late.
Right.
So, once it's on those TV shows, once it's out on People magazine, it's just too late. But everybody said, oh, I could make money. I could be a flipper. I could buy a piece of property. I can, fix it up myself because I'm handy, and I will then sell it for some multiplier what I paid for it. And I just need the initial capital to get into it. And I'm going to get, 20 people together to put 10 grand a piece in, or, 10 people to put 20 grand a piece in, or whatever the math is. And I'll do a promissory note, and I'm going to pay them, 20% interest rate in a year, and we're going to all make money. We have so many cases in my office for those kinds of things. It's crazy because people think they could do it, and they can't do it because the numbers don't really work out. They think it's going to work out. It's more expensive than they think it is. There's some hidden problem with the property, whatever it is. So there are lots and lots of things like that. They don't necessarily start out as scams. They don't start out as scams. They start out as, people with good intentions. They're deals that go south. Probably ignored the securities, the regulatory requirements. May have been small enough deals that they weren't necessarily subject to any technical securities requirements other than anti-fraud requirements. But nonetheless, they're, securities deals that we get complaints about and their investigations. And, it ends up that they were fraudulent because they never got disclosure. Investors didn't understand the risks. They were said, oh, this is a sure thing. We're absolutely going to make money. Piece of property costs 200. It's in a depressed area of town that's starting to flip over. We can sell this easily for 400,000. Once we flip it up, that's 100% return, but it isn't really once you figure, transfer taxes and property taxes and it, all the hidden things, it costs $150,000 to fix. So now you're up to $350,000, the $50,000, and then the $50,000 you think you're going to make is eaten up also.
Right.
So, things like that. So you got promissory notes. the big one, the really big one that has a lot of things that aren't legit in it, and a lot of risks that investors are not aware of, is really crypto.
Yeah, that was one of the mentions in the
Report.
2022 enforcement report. I guess digital assets ranked 9th among threats in 2019, second among the threats in 2020, and first in 2021. And the state regulators have identified it as the top investor threat for 2022.
Right.
So let's talk a little bit about the digital asset.
Right.
Cryptocurrency.
So let's start with crypto. And
Okay.
there are some cryptocurrencies out there that are successful but incredibly volatile.
Yeah.
So, we're concerned that investors understand that. We're concerned, let me step back a step, that cryptocurrency, typically stable coins, whatever you want to look at, typically are securities. And there has been very little, if any, and most of the time none, no attempts to comply with the securities laws. So you've seen waves of securities actions brought against companies, particularly the ones that are out there acting like they're banks, where people can deposit cryptocurrencies and get interest back, or promised interest back on their deposits of crypto. And we've brought all kinds of actions against companies, BlockFi being a very big one that the states brought with the SEC, against those entities that kind of look like banks but aren't banks, because the way the securities laws function is securities regulators recognize that there are other regulators in the financial space, and when a product or an entity is regulated by these other regulators, securities regulators take a step back because there's already a regulator in that space. So, but these entities are functioning like banks, but they're not banks. So when somebody hears, oh, we have interest-bearing crypto accounts, and they hear all the language that sounds like something is a bank, they think, oh, this is a bank. There's going to be FDIC insurance. There's going to be all kinds of things like that. But there isn't any of that because it isn't really a bank.
Right.
So it, again, kind of falls squarely within the securities universe because there isn't another regulator there for it to act like a bank. So that's why you've seen securities actions where the states and the SEC have shut down things like BlockFi.
Right.
And why other entities are now filing bankruptcy. Voyager and Celsius are now in bankruptcy based on having a similar business model where they have these interest-bearing accounts. And there are other companies that are lined up or in bankruptcy that have similar things. And there are other companies. There was a multi-state action that was announced on Monday against another entity called Nexo that also has similar setups where they're interest-bearing accounts, because there's no question that those interest-bearing accounts are securities. They're not registered, so they're not regulated, and they're really out there without investors understanding the risks of those accounts. So we've been very proactive in getting out there and saying to those entities, time out, stop what you're doing. These are securities. You're not telling the investors what's going on with them. And look, you're not able to pay the interest that's promised, and look at these bankruptcy proceedings. It's questionable as to whether or not these investors who are creditors in your bankruptcies now are even going to get the principal back.
Right.
So that's a really big question. So that's kind of crypto in general.
Very high risk, very
high risk, very volatile. Investors don't understand that.
Right.
Some do, most don't. You've got NFTs. Non-fungible tokens. Again, a security. No security compliance going on around them.
Right.
Stable coins. I think stable is a misnomer.
Yeah.
You've got Terra Luna, supposedly stable, based on the underlying algorithm keeps it stable. I'm still trying to understand that. I don't understand how the underlying algorithm, when it's not staked to real money, keeps it stable.
Right.
There was a big conversion a couple of weeks ago. I think it was Ether or Ethereum, where the crypto had to become staked. I think we're still, I haven't heard the outcome of, did that staking work and is the money really there to back it?
Mhm.
So there's a lot of unknowns here, and it's a developing area. I think it still really remains to be seen. My concern as a securities regulator and as somebody whose business is investor protection is that investors don't understand the risks and that the entities are not all that anxious to come into compliance, even though the regulators have been saying come into compliance.
Right.
So it's a very risky area. So that's let's call it the legitimate part of the industry. Then we've got the fraudsters. Fraudsters are always there to capitalize on what's ever hot and in the news, because
Right.
investors, the best scams have a lot of legitimate information in it. So it all sounds good. It all resonates. An investor, potential investor will hear it and they're saying, oh, I'm hearing what I'm hearing on the news shows. I'm hearing what I'm reading about in the paper. It all sounds real. And then it's easier to ignore the part that sounds questionable because there's so much truth around
Right.
everything else. So there are investors, we get calls all the time from people who are just sending their money to crypto scams where I think they're just out and out thefts. Where
Right.
people think, oh, I'm going to invest, I'm going to buy crypto from XYZ and get, ABC kind of crypto. And they get fake statements for a while that look like their money's just, growing exponentially. The minute they say, I want my money back, there's no money to be had. And the person they've been communicating with, typically by email, sometimes by text, sometimes by WhatsApp, pick your favorite, online app for communication. They disappear.
Right.
Locked, they get whatever. And then you can't find them. And there's
And
really
you
no
can't
money.
get the money back.
You can't
You've
get the
lost
money
it.
back.
There's
You
really
can't
no
get,
recourse.
they're phantom profits, and you can't get the principal back that you put in.
Right. How easy is it for an investor to know that they've been defrauded?
Not necessarily easy, because investors don't, like anybody else, and I'm not blaming investors. I never blame the victim. It is not the victim's fault that they're victimized.
Right.
It's not necessarily easy to know because the scams are so sophisticated. And they're really designed to lull people in. They're designed to string people along. They're designed to prevent people from going to complain to regulators for as long as they could possibly
Right.
delay. Because it's not like the scam artists aren't ready to shut down one scam and open it up the next one and the next one and the next one, because they do keep, I really fully believe they keep them lined up and they shut down one entity. Yeah, they don't even have to change the signage. They just change the website and open up the next one. But what investors really need to know, and I think what investment professionals need to know, is the second you suspect something, get in touch with a regulator. Because the earlier we can get in, the earlier we can get into it, the more likely it is that, if there's money to be recovered, we can try and recover the money, but we can, issue cease and desist orders, things like that, get the word out to people to not do business with whatever that entity is.
Yeah.
But
Plug the hole.
they multiply. I mean, it's worse. It's way worse than any of the boiler rooms and things like that used to be 10, 15 years ago.
Right. And I want to take a moment to remind the attendees that you are able to submit questions if you would like. Just utilize the chat feature. Julia, I see a question from you. I'm not going to bring that up, and I'll talk to you about that afterwards. I don't think that one's going to apply here. Let's see here. One resource that I haven't gotten through it all the way, but I did want to flag it, and it is in the deck. The CFPB just issued a report on recovering from elder financial exploitation. So that particular resource, it was released in September, so it's very new, has a lot of good information in it. There is a link to that in the deck. So I just wanted to point that out. And I love the fact that there was like $312 million in restitution utilizing the 2021. So I mean, there is hope. There is some hope for people that are defrauded. They just need to act quickly. What other, was there anything else about the enforcement report that you wanted to highlight? Well, I think we talked about.
I think it's interesting how, I mean, we're active. I mean, there are lots of states bringing lots of actions. And I think I spoke last week at an SEC regional conference, and I think the idea that the states are the local cop on the beat really is important, because when you go to the federal regulators, they have minimums for the cases they can take.
Oh.
You know, they're really there for big cases, and we will pay attention to small cases.
Good.
You know, we'll pay attention to $1,000, $5,000 cases. Like, I'm not saying we're going to bring an act, we're going to bring enforcement actions or, make criminal referrals or whatever else for every single one of them. But we'll listen to the investor. We'll give them some advice about what to do. I've been on the phone with people many times where I've said, look, I know this is terrible, but I'm going to tell it to you straight. I think you've lost this money. I think you need to move on from this. The best advice I can give you is to talk to your tax advisor about how to write off this loss. But the person's gone. This is never going to pay, you're never going to get money back for this. It's, there isn't a criminal prosecution here that somebody's going to prosecute. But you need to do something else, or these are your options for doing something. You may want to sue the person, but again, that might cost you money, that might cost this, that might cost that. But, help people at least kind of get a straight answer about what's going on with whatever their complaint is.
Right. And I think it's important to talk about the disclosures that broker dealers and investment advisors have disclosure requirements if they're making recommendations or selling securities. And I think a lot of people don't really look at those disclosures. It's kind of the small print in the room. Sometimes they don't even open up their account statements. So, those are kind of things that, it's poor. I'm not saying that the victim is at fault, but the victim does have a role to play in protecting themselves. And the more education they have, the better for them.
That's absolutely true, because, I've had cases where somebody said, oh, I never opened up my monthly statements. And then they come to us years later and say, well, I didn't approve this transaction. And I said, well, this transaction happened 3 years ago. Did you call the brokerage firm? And they're like, no. I said, well, did you look at your monthly statement? No, I don't open the envelopes. I'm like, you have to open the envelopes, because there's a concept in the law where you've ratified a transaction if you didn't take a look at what was on your statement. So it's critically important to take a look at your statements, because, there could be fees that you didn't know you were going to be charged. There could be fees that weren't legit. It's the way to track that your broker is, doing what they're supposed to be doing in relationship to your statement. It's the way to make sure that things that, that you've authorized happen, and things that you didn't authorize didn't happen. So it is really important for investors to open up their monthly statements, even though, believe me, I'm opening up my quarterly retirement statements and I'm going,
I don't even want to look at it.
I don't want to look at it, but you have to open it anyway. You got to take a look at it. So, you got to
invest in a down market, folks.
Right. I'm not giving out any investment advice, but you've got to take a look at it, because ultimately, legally, you're bound by what's going on in there. And if you don't complain soon enough, you're stuck with what's going on in there.
Right.
And it's also, speaking of disclosure, so let's talk about legit industry for a while. Their regulators can only do so much. There are all kinds of rules in place about the disclosure that's supposed to be given to investors. There's disclosure in relationship to the products. There's disclosure in relationship to the people, because the people in the broker dealer, the brokerage universe and the investment advisor universe are really the products in a lot of ways that are being sold. Because when investors rely on those professionals for advice, they're essentially buying those professionals as the product, because the product is their advice. And you need to understand that person's background, their expertise. Have they had disciplinary, have they been sanctioned with disciplinary history? Have they been sued by their clients? So we've always told investors, check out your professionals, call us, go on to BrokerCheck, go on to IAPD. We have links to all of that, either in the links that on the, on the PowerPoint, or go onto NASAA's website. You can find that. Go onto FINRA's website, just Google IAPD or Google BrokerCheck. You'll figure out how to find it. Or just Google your broker's name or your advisor's name. That's a great way to find out adverse disciplinary history.
Right.
because it's very hard to keep anything secret these days. Just Google their names. You can see if anybody's gotten, has, a background that you might not want to, might indicate you
business
don't wanna do business with that person. But you do those things, those are the products. And then, there's the form CRS, it's the customer relationship summary that goes out under SEC rules that explains what's going on, what the relationship is with the customer and the advisor or the brokerage firm. There's the brochure supplement that goes out under the advisory rules that explains information about that particular investment advisor representative. There's the Form ADV Part 2 that explains what the relationship is between an investment advisor and the client. There is a lot of information out there. It's a lot to digest, but it's really important because the disclosure information in there is also information that the customer is bound by. So if the customer says down the road, I didn't know, and they got that disclosure information, whether they read it or not, they are going to be bound by what the disclosure information that was given to them.
Right.
And when they sign their account opening forms, when they sign all their stuff, they said, I've received that disclosure and I've read it and I understand what's inside. So they're going to be bound by it, even if they haven't read it. So it's really important to take a look at it.
And it's important for investors to understand that there's a difference between an investment advisor and a broker dealer. You've got a regulation, a conduct standard difference for sure, among other things.
There is, there is. It is kind of like the eternal question that's existed since I started practicing as a securities lawyer. Customers don't understand the difference between investment advisors and broker dealers. An investment advisor is a fiduciary now under regulation best interest. A broker dealer has an obligation to act in the customer's best interest. It's a relatively new rule. It's about 2 years old. I think it's going to take, some time until we find out what is the difference between best interest versus a fiduciary duty, if there is one. Jay Clayton, when he was chair of the SEC, said there really isn't a lot of space between the two. I think it will remain to be seen. To me, the big difference is when does the obligation kick in and when doesn't it? In the investment advisory space, it pretty much lasts continuously. In the broker dealer space, it depends on what's going on in the relationship.
Right.
Suffice it
And the
to
form
say, customers,
CRS is the document that's going to help you explain that to the
Right.
client, right?
Right.
Just when you're there.
and that's why it's important for clients to read that and understand it.
Mhm.
Suffice it to say, clients tend to think that their financial professional is always looking out for the client's best interest.
Right.
Sometimes yes, sometimes no. The client needs to understand that. But again, as in everything else, it's the client's money. The client needs to feel comfortable with what's going on, needs to understand what's going on. I always tell a client, if they don't understand what's going on, ask questions.
Right.
Keep asking questions until they understand. If your broker gets frustrated, find a different broker.
Right.
You should find, or advisor. You are paying that person in one way, shape, or form. That person ought to be willing to explain to you and have the patience to explain to you what's going on. And if
Right.
you're not comfortable in that business relationship, like any other business relationship, take your marbles, go someplace else.
Yes, right. Well, Commissioner Lubin, I just want to thank you so much again, and congratulations on a wonderful year of being the NASAA president. You did a lot under your watch, and as immediate past president, you'll continue to serve on the board and the committees. I'm sure you're going to be extremely active in as you've been for years, and we just really appreciate you very much. And thank you for joining us today.
Thanks for having me.
Julia.
I want to thank both of you. I have lots more questions now that I will be calling Margie on. And at least I can call Margie if I'm asking the question incorrectly, so I won't look too much like an idiot. But I want to thank both of you. I am just amazed at all of the fraud that goes on. I had no idea that you could actually clone a DOI website, and then the amount of money that's involved with all of this. So wow.
It's disturbing.
It is disturbing. Thank you.
You
so
just
much.
got it. You have to just assume you're trying to be defrauded.
Yes.
Yeah, unfortunately, that's true.
Yeah.
Well, thank you for bringing this awareness to the SILA community. Thank you very much for participating in this webinar. I want to remind everybody that this webinar was recorded. It will be in the Foundation webinar library in a couple of weeks. And again, this has proved to be very informative. I am so grateful to both of you for taking the time to do this for the SILA Foundation. And for everybody, I'd like to say thank you for joining us. I hope you have a great afternoon and a great rest of your week. And we look forward to seeing you again in November for our final webinar for the 2022 year. Thank you both very much.
You're welcome. Take care.